Before you commit your precious earnings, it's crucial to ensure your chosen investment avenue aligns with your financial objectives and promises robust returns. As you embark on the journey of sculpting and enriching your investment portfolio, the timeless debate between real estate and gold emerges as a compelling starting point. The question that beckons: is one superior to the other, or could a harmonious fusion be the key to your financial prosperity? Stay tuned to uncover the revelations that will reshape your perspective. Main differences between gold and real estate as an investment. Gold and real estate stand as distinct pillars within the realm of investment, each bearing a unique set of virtues and vices that can significantly influence the trajectory of your financial voyage. A discerning grasp of these dynamics, their potential advantages, and inherent drawbacks will be your compass on this voyage of investment enlightenment. Liquidity and accessibility. While gold undeniably offers superior liquidity and a more accessible investment avenue, the real estate arena presents its own set of considerations, intricacies, and avenues of confidence for potential investors. The acquisition of gold is a straightforward affair, achievable through online dealers, local pawn shops, or brick-and-mortar storefronts. Liquidating your gold investment usually involves a seamless process of reselling it to a dealer at its prevailing market value. The simplicity of this investment option renders it remarkably accessible, even to those venturing into the world of investments for the first time. Conversely, real estate transactions unfold over an extended timeline. If you're without immediate capital, the path to ownership involves securing mortgage approval, submitting competitive offers, navigating deed and title transfers, and navigating a labyrinth of paperwork come closing day. The intricacies of buying real estate often entail extensive negotiations with sellers and mortgage lenders, in addition to prerequisites like property inspections. Without question, real estate demands an investment of time and patience. The endeavor of selling a property mirrors the complexity of its purchase. Furthermore, real estate may remain out of reach for investors lacking the necessary down payment or falling short of mortgage qualification. Diversification and risk management. Both gold and real estate serve as potent diversification tools for your investment portfolio, bestowing a touch of diversity that can act as a stabilizing force amidst the ebbs and flows of the stock and bond markets. Yet, as with any foray into the investment sphere, an awareness of the inherent risks is paramount. The price trajectory of gold typically ascends over time, punctuated by occasional fluctuations. Investors often regard gold as a bastion of low risk, though its returns tend to hover at the moderate end of the spectrum. In contrast, real estate introduces a higher degree of risk, but it is a realm where your endeavors directly mold the outcomes. Strategic investments in premium upgrades can, in turn, trigger a surge in property value, a dynamic where your actions wield direct influence over returns. Tangibility. Investing in physical gold provides you with a tangible asset, a gleaming testament to your financial acumen that you can hold in your hand. For many, the allure lies in the ability to lay eyes on the concrete rewards of their investments. Similarly, real estate bears a striking level of tangibility. However, how you choose to embark on your real estate investment journey can significantly sway this characteristic. Opting for real estate investment trusts or delving into a real estate investment group may slightly dilute your direct control over the property, but they remain potent avenues for weaving real estate into your investment tapestry. Financing. When it comes to acquiring a stake in gold, cash is king. While the notion of taking out a loan to finance your golden endeavor may cross your mind, it's a path best trodden with caution. Unless you secure a loan with an alluringly low interest rate, the anticipated return on your investment is unlikely to outpace your interest payments, leading to a net loss. Alternatively, consider the option of transferring funds from an existing era into a gold-backed era as a savvy alternative route into the world of gold investments. In the realm of real estate, having a cash reserve to cover the down payment and closing costs is prudent. However, many astute investors opt for mortgages to facilitate their property acquisitions. Yet, a word of caution. Ensure that the interest rate you secure is sufficiently modest, allowing your returns to comfortably surpass your monthly obligations. Once you've taken the reins of one property, you gain the ability to wield your principal as a lever, opening doors to additional acquisitions through avenues such as a second mortgage or a home equity line of credit. Volatility. Within the realm of investments, it's real estate that often dances on the tightrope of volatility. The pendulum of its value swings in response to a myriad of influences: interest rates, the ebb and flow of available properties, and the shadow of inflation looming large. In the world of real estate, it's imperative to cast an astute eye on the ever-shifting tides of market trends. Some locales present the daunting challenge of securing property at or near the listing price, while oversaturated markets can tether you to a property longer than your initial intentions. Conversely, gold emerges as a stalwart bastion of stability when viewed through a long-term lens. Its historical trajectory charts a steady ascent, a testament to its resilience as an investment vehicle. Nevertheless, in the short term, this gleaming commodity is not impervious to the forces of inflation and the delicate dance of supply and demand, which can cast ripples across its value. To unlock the full potential of gold, investment advisors often advocate for a commitment of several years, allowing it the time and space to work its financial alchemy. Maintenance costs. Investing in real estate comes with an enduring responsibility: the maintenance and preservation of its value. Whether you're leasing the property or calling it home, it's prudent to earmark an annual budget equivalent to 1% to 4% of the purchase price for the crucial tasks of maintenance and upkeep. Gold, on the other hand, exudes a certain self-sufficiency. Nestled within a controlled environment of stable temperature and moisture levels, it demands no ongoing care. However, it's crucial to account for storage fees if you opt for the secure confines of a private vault or depository to safeguard your golden assets. Historical performance between the two investments. Should your investment horizon stretch into the realm of long-term commitment, gazing into the annals of history and comparing the past performances of gold and real estate can be an enlightening exercise. Yet, keep a discerning eye on the horizon, for both these assets harbor their share of volatility. It's a cardinal rule of investment that past glories don't invariably foretell future triumphs. Historical performance of gold. The rich tapestry of history bears testament to gold's enduring status as a form of currency, providing investors with an extensive reservoir of performance data. Here, we present a glimpse into the realm of long-term average returns on gold investments across various epochs. 1972 to 2021 to 7.6%, 2000 to 2021 to 8.3%, 2010 to 2021 to 3.96%, 2016 to 2021 to 9.09%. This data mosaic reveals that the trajectory of gold investments in the long haul doesn't invariably equate to a steady ascent. Notably, the shortest duration in this compilation, spanning 2016 to 2021, boasts the loftiest returns. In essence, the journey of gold investment often requires steadfast patience, juxtaposed with the vigilant monitoring of its ever-fluctuating spot price, month by month. Historical performance of real estate. In the realm of cost fluctuations, real estate showcases a tapestry of greater variance than its gilded counterpart. For some, the allure of volatility lies in its potential for commensurate rewards. Risk, after all, can be the harbinger of prosperity. Let's delve into the annals of real estate's annualized rates of return, dissected across the same temporal spans as our exploration of gold. 1972 to 2021 to 5.25%. 2000 to 2021 to 4.70%, 2010 to 2021 to 5.34%, 2016 to 2021 to 7.73%. Yet, it's vital to note that the fate of your real estate investment is not solely at the mercy of market tides. Your deliberate actions hold sway. The decision to undertake upgrades that outshine their cost implications can breathe new life into your property's value. However, reaping this reward demands a readiness to roll up your sleeves and invest the sweat equity required. For those who seek a more hands-off approach, a different investment avenue may beckon. How are gold and real estate used as an inflation hedge? While neither gold nor real estate holds an unequivocal monopoly as inflation hedges, both bear qualities that render them astute investment choices in times of rising inflation. Gold, throughout the annals of history, has exhibited an intriguing dance with inflation, an inverse relationship that has caught the attention of many. In the throes of rampant inflation, gold frequently emerges as a steadfast sanctuary where individuals seek refuge, sheltering their wealth from the erosive forces of value depreciation. Consider the tumultuous inflationary tide of 2022, where consumer prices surged by a formidable 9.1%. Remarkably, this was mirrored by a surge in gold demand, spiking by an impressive 12%. Simultaneously, the world of real estate often mirrors the upward trajectory of inflation rates. As a property owner, you can anticipate the value of your investment to march in tandem with inflation. Furthermore, if your real estate serves as a rental property, it can evolve into a potent bulwark against the erosive effects of inflation. A prime example resides in the period spanning May 2022 to 2023, where rental prices escalated by a robust 8.4%. Comparing market demand and supply. The delicate balance of supply and demand casts a profound shadow over the destiny of assets, shaping the intricate dynamics of both gold and real estate. Within the realms of gold and real estate, scarcity reigns supreme. Although we have yet to flirt with the upper echelons of their finite reservoirs, it's worth noting that the processes of mining for gold and the construction of real estate are not endeavors that unfold at the speed of thought. Gold, often coveted as a sanctuary during inflationary tempests, finds itself in the spotlight when economic turbulence strikes. In these moments, a surge in demand for the precious metal becomes evident, akin to a tide rushing to seek refuge from the swelling seas of inflation. As the waters of inflation begin to recede and stabilize, the allure of gold as a sanctuary often wanes, and the tide of demand gradually ebbs. In the realm of real estate, demand takes its cues from the oscillating rhythms of housing prices. As the cost of real estate ascends to lofty heights, a growing cohort of individuals find themselves compelled to tread the path of renting rather than plunging into outright purchases. Yet, this shift in demand towards rental abodes, in turn, beckons investors to acquire real estate properties for conversion into rental assets, breathing life into a cyclical dance of supply and demand. Which investment has better returns, gold or real estate? The pendulum of returns in the gold versus real estate showdown sways to and fro, a perpetual dance of fluctuation, as exemplified by the annualized return rates we've previously unveiled. However, it's within the realm of real estate that investors often wield a greater degree of control, steering the ship of their investments towards the shores of higher returns. What are the tax implications of investing in gold and real estate? The tax landscape of gold versus real estate unveils its intricacies, with the implications hinging on your chosen investment avenue. In the eyes of the IRS, physical gold assumes the mantle of a collectible. Any gains accrued from the sale of gold are thus subject to the regular income tax rate, with the highest potential rate pegged at 28% if you've held your gold for over a year. Gold-backed ETFs walk a similar tax path, while gold mining stocks are subject to the capital gains tax rate. Meanwhile, real estate investments usher in an array of taxes, a symphony of financial considerations. Property taxes are a variable burden contingent on your geographic locale, where the U.S. average hovers at 1.11%. Net investment income tax may loom if your income scales to lofty heights, and your real estate investments yield substantial returns. Real estate income tax steps into the spotlight when you venture into the realm of renting out your property. Capital gains taxes take center stage when the time comes to part ways with your real estate, particularly if the selling price surpasses its cost basis. Individual income taxes beckon for those who dabble in real estate-backed funds, even without direct property ownership. Navigating this intricate web of taxation forms an integral part of your investment strategy in either gold or real estate. Different ways to invest in gold and real estate. The universe of gold and real estate investments unfurls a tapestry of diverse avenues, offering you the latitude to sculpt your portfolio in alignment with your unique financial ambitions. In the realm of gold, your options are manifold. Embrace the tangible allure of physical gold bullion or coins. Venture into the world of gold ETFs, securing your slice of the golden pie through shares. Explore the horizons of a gold era, where the luster of gold serves as the cornerstone of your retirement strategy. Opt for a more indirect approach by investing in the stocks of gold mining companies, becoming a participant in the ventures that unearth this precious metal. On the real estate frontier, a plethora of paths beckon. Secure a personal dwelling with an eye on future resale. Dive into the world of rental properties, basking in the stream of rental income that flows in. Tread the path of real estate investment trusts, unlocking a slice of the real estate market without direct property ownership. Embark on the exhilarating journey of property flipping, where savvy investments can yield substantial gains. Consider the camaraderie and collective wisdom of real estate investment groups, pooling resources for mutual benefit. Partake in monumental real estate endeavors through online platforms, contributing to substantial deals that can reshape your investment horizon. The intricate tapestry of investment avenues awaits, offering you the keys to diversify your portfolio and chart a course that aligns seamlessly with your financial aspirations. How much of your portfolio should be allocated to gold and real estate? Embracing both gold and real estate as pillars of your investment strategy presents a compelling avenue for portfolio diversification. Nonetheless, prudent counsel often suggests a measured approach to alternative investments, contingent upon their nature and the scale of your portfolio. Engaging in a conversation with your investment advisor holds the key to determining the optimal percentage of your assets to allocate toward the realms of gold and real estate. Gold and real estate, advantages and disadvantages. Let's dissect the advantages and disadvantages of both gold and real estate, offering a comprehensive view of these investment landscapes. Advantages of gold. Relatively low volatility. Gold exhibits a penchant for stability, often weathering the storm of market fluctuations. Accessible to new investors. Its straightforward nature makes gold an inviting prospect for newcomers to the investment arena. Hands-off investing. Gold allows for a more passive approach, where investments can be made without the need for constant intervention. Disadvantages of gold. Lower returns. Historically, gold tends to offer more modest returns when compared to the potential windfalls of real estate investments. Limited control. Investors have limited sway over the factors that influence the value of gold. Advantages of real estate. Improvement potential. Real estate investments empower investors to enact changes that can amplify their returns. Diverse investment opportunities. Real estate offers a versatile array of investment options, catering to varied preferences. Steady cash flow. Rental properties can provide a consistent stream of income. Disadvantages of real estate. Low liquidity. Real estate assets are not easily converted to cash, rendering them less liquid than some other investments. Access barriers. Not every investor can partake in real estate due to factors like high entry costs. Ongoing maintenance. Depending on the type of investment, real estate can demand continuous upkeep. This comprehensive perspective should aid in navigating the terrain of gold and real estate investments, allowing you to make informed decisions that align with your financial objectives. Is gold a safer investment than real estate? Gold emerges as a bastion of safety in the long-term investment arena, yet its short-term voyage can be fraught with volatility, marked by abrupt fluctuations. This tempestuous short-term sojourn aside, gold claims an advantage: its relatively modest upfront cost in comparison to the towering entry fees of real estate investments. Moreover, the specter of unforeseen maintenance expenses that often haunt real estate is a concern that seldom casts its shadow over the world of gold, cementing its reputation as a safer haven for many investors when juxtaposed with the intricate domain of real estate. Which is best for long-term investment? The perennial question of whether gold or real estate holds the crown as the superior long-term investment finds its answer in the context of your specific goals and aspirations. Are you in search of an investment path where minimal intervention begets steady, gradual growth? If so, then the resplendent allure of gold may beckon you. Conversely, do you envision a financial journey paved with a consistent stream of income, one where the reins of control rest firmly in your grasp? In this scenario, the expansive realm of real estate may be your favored path to tread. The key to making the right choice lies in aligning your investment strategy with the distinctive goals you hold dear. In the quest to unearth a wealth of insights within the realms of real estate and gold investments, we've traversed a landscape brimming with knowledge. These investments, each possessing their unique virtues and idiosyncrasies, hold the power to sculpt your financial future. But the adventure doesn't end here. If you're keen to delve even deeper into the world of alternative investments and wish to grasp the distinctions between real estate and Bitcoin, simply click on the video displayed on your screen. Thank you for joining us, and may your investment endeavors be prosperous.